Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the S&P 500 on a 4-hour chart. Forget about the wave count for a moment and just focus on the price, which we can see that the group 2 up here, the 65.72 and the 80 here, really holding the price here, so that's our sort of resistance point there. And now we're seeing the support here play out as resistance here, so that really gives a bearish bias to the market. The only thing that would change that, of course, would be finding support on the midpoint here, the 1450, and it's struggling to do that. Not to say that it can't do it, because it actually hasn't failed yet. The point of failure would be the 144 here, finding that as, well, breaching that in a clear way, or better still, finding that as resistance there. So that's really the sort of overtone for the market. So even though they're creeping up there a little bit, we really need to be mindful that this can fail at the 1450 there, and this particular pattern through here does appear to be a corrective pattern in terms of the A, the B, and the C there. However, in that saying that, this little move down through here, this is also in 3 waves as well, so that's corrective as well. So a top could be made through here as well. So we really need just to allow that to play out. The motivating factor last night was the ADP figures and their part of the employment figures for the private sector, and they also have a bearing on the non-farm payrolls figures that are coming out on Friday, so that can give a positive bias for Friday. So I'm kind of hopeful of finding support on the 1450. However, we need to trade what we see, and what we're seeing at the moment is resistance. We're not finding a support basis to work off. Well, we work off the closest largest number, and that would be the 1450, as 5 is the second strongest number in the markets in terms of psychology. So we really need that there, and this is the same for the other markets in the US and Europe as well. You can see the same pattern here. This is a 1-hour chart for the Dow Jones. You can see that that the 13,500 is the sort of line in the sand there as well, and it's also the same as well. This is a bit of a larger picture here. We've got this A, B, and C up here, which is a corrective pattern, and then we've also got this as an A and a B and a C down through here, which is corrective as well. So we could see, if we look at this coming back a little bit further, for the high over here for the Dow, we've got this 5-wave structure to the downside here, which is an impulse wave to the downside. So we really need to treat this as a corrective rally, and once it's completed, to see further downside. But in terms of trading, using the price of support and resistance really strengthens up Elliott wave. It's very difficult to consistently take money out of the market just using Elliott wave alone. I haven't seen many people do it. It's not to say that it can't be done. I do know a few, but it is a bit tricky. It just strengthens it if you understand support and resistance of what price point that you're working from. And at the moment, would be going long here would be exposed to an unnecessary risk, because we haven't got the closest largest number as support there. And this could also translate into the European markets as well. We've got the DAX sitting at 73 there. Once again, we've also got the 5-wave structure to the downside here in terms of the 1, the 2, the 3, the 4, and the 5 as an impulse wave. So we're looking for a 61.8 retracement back up through here. And that said, well, you know, this is the closest largest number here, 73. The DAX and the FTSE are working quite closely together now, and they would be in line with the US markets as well. The important figure here is the 72 here. So while the market's above that, it is positive, and it's also positive once it's above 73 as well. In terms of actually getting a trade set up for the long side, it would be mindful to be aware of the 1450 on the S&P 500 developing support or not in this case, but also just drilling in here a little bit further. When we're dealing with the closest largest number, the 73 in this case here, we would be looking for group 2 to be the support for that, and also the group 1 above here, the 10, 20, and the 30 is group 1, as being holding the price to the closest largest number. As always, once the subgroup 1, the 1, 2, and 3 here, 10, 20, 30, develops support on top here, then it separates itself psychologically from the 7300 here, and then we can start to look to the upside there. So the safer trade is having the support on the 30 there. You can even drill that down into the 37.33 and then put another 3 on the end there, because you'd be going into micro levels at that stage there. And that's a worthy thought too, by the way, and that would also be true for Forex and other markets when you're drilling into smaller degrees of structure. So it is positive being above the 72. It is positive being above the 73. You can scale in on top of the 73.10 here, and then building another position on the 17.20 once it's got support through there, and then adding the final one onto the 33 there. However, you can just also wait for that as well, because as you can see here, it's just always the same with Group 1 anyway. That's all cool. And the FTSE here is doing the same thing at 5.8, and once again as well, we've got Group 2 here as subgroup 2 as support. We've got subgroup 1 as resistance here. If support is found on top of 10, 20, 30, then we know that we're going to the upside, and that would be quite a good trade, because the distance across here, this pattern across here, is the foundation for the next trend if it's going to be moving to the upside. So support on the 30 here would have this here. So in terms of Richard Wyckoff's work, the distance across here can be equal to the price to the upside. So squaring time and price to the upside, which is really about the volume traded and the it's really about the accumulation in here, 1 unit for 1 unit to the upside there. However, also be mindful of the 1450 on the US markets, but finding support on the 58.30 would be what we'd be looking for there. And on the short side here, if the 72 became the resistance, well then tested resistance or retested, then you would use that to scale in, and also use the 65 as a retest to move in there as well. The Australian market is I guess playing catch up in its own little sort of way, but we've been positive on this market, and will continue to be positive. However, as mentioned yesterday, the 44.50 here is an old high from way over yonder, and it will give us grief at this level here. And the other thing for the Australian markets is the bullish weekly cycle, which is seeing Wednesday as the high for the week, and Thursday as the bear day. So just be mindful of that, and being mindful of that would be if the 44.50, the midpoint here, found support, then terrific, then head up to the long side and look further up. If it struggles at the because the cash is also at the 4400 here, so the futures are trading above the cash, which is a positive sign. However, being Thursday and being the resistance at the 50 there, which is 5 second strongest number, we may see this come back down into Group 1 here, checking for support. And there is plenty of support here, and we could start looking at the 44.20 here, the pivot within Group 1 here, the 10, 20, 30 as the support there. But just be mindful that it is Thursday, and even though the US markets are up slightly, we can still get a bear day, because we have been working opposite to them. While this has been moving up here, the US markets have been on the lower side, but we've recognized that, and we've been trading long to the upside. Alrighty, let's have a look at the commodity markets, and they're a little bit mixed as well, because they're being put under pressure from the US dollar, which is now gleaning support on top of the major trading level 80. Okay, starting with oil here, we were looking for the B wave to pull back to 61.8 into 91 here, but it's simply fallen out of bed here, as you can see here. So we, in this degree of structure that we're working with, we need to rework that wave count, but the next degree higher still has the right direction. So when we're looking at the larger picture here, I'll just go to 1 degree higher. So we're looking at a large triangle pattern here for crude oil, as you know, and we're looking for the 61.8 retracement level down here, which is around the 86 here. But we need to take into consideration the minor trading levels, which will be 88, 85, 83, and of course 82 and 81. But so look, what we're looking for down through here in this E wave here is in three waves, an A and a B and a C wave down through here. So we thought we would be getting a larger B wave moving back up through here. It wasn't the case, and when we have a look at that in terms of that structure coming down on the 4-hour chart here, it can be counted this way. If anybody else has got any ideas, please send them through. But looking at the 1, 2, the 3, the 4, and the 5 down to here, then the A wave to here, the B wave in three wave, as B wave's always got three waves in them, and then the C wave up here because it had 5 waves in here as the wave B here, and then we're looking down for wave C here, and as I mentioned, the 61.8 retracement level is down around the 86 here. So the 88 is going to be important, the 85 is going to be important, and also the 86.50 is also going to be important as well through here. We could continue the same count as we had before within here. Instead of relabeling it here, of course, we can have this as the A wave here, the B wave here, and the C wave there. It's just a little bit doesn't really have the right sort of proportions, right look and feel as they say. And also too, if we have a look at Brent crude as well, just for the moment here, the Brent crude has got this patterns in terms of patterns here. We've got this sharp move down through here, and then we've got this A, this B, and this C wave here, which is really quite nice here. And I do look at this now and again, but not every day, and I failed, and I missed the look and the feel of it, because this has had a nice cleaner structure as a corrective pattern through here, an A and a B and a C. That's why I've lined the other one up the other way. And then we'll be looking for a 5-wave structure to the downside here. So in that 5-wave structure to the downside, the third wave will be the strongest, and you can see that unfolding now. There'll be some sort of equality between the length of this structure here and this one here. They may be equal, or this structure here may be 61.8% of the length of this structure here. So, but anyway, as further downside to come through here, and this would be seeing further upside in the US dollar until this completes itself down, down through here. The copper market as well. Okay, it's moved a bit softer through here. So the bottom line for this is, if we look at, just go back to the bigger picture here for a moment. Now, we're in a wave 4 here. This pattern is the same as gold. Now, this wave 4 down through here, which would be a bit like the euro as well, so that's under pressure at the moment as well, while the US dollar is above 80. So this move in wave 3 to wave 4 here, I've always felt that this is a bit simplistic in terms of its structure. So I just felt like we'd get more of a more complicated structure through here for wave 4, because wave 2 here was simple, so wave 4 will be sideways and complex. So this particular move that we've got down here for the wave 4 here at 38.2 retracement level, which was the 367, so all that's fine. However, I think that we need to look at this as down for an A wave, up for a B wave, retesting the 80 here. 8's a profit-taking number, and the third strongest number in the market. So an A and a B and a C wave to come down through here further is certainly possible. If the price finds support on top of the 80, the 380, then we can look at this testing the 390 up here. Well, in terms of ratios, the 388 we'd be looking at. But look, while it hasn't got support on the 80, then we need to consider that this move up here is in 3 waves, and we'll just drill into that now. So in drilling into that now, we had it labelled like this for some time in this move up through here in 3 waves. And that's fine. And now that it's coming down, much further, sitting, all that weight sitting there now, it's really overlapping this structure here at the top of this one here. So it is creating it now, or confirming it as an ABC here, and we would see lower ground here. How far will we come down? Well, there's always equality within corrections. So the length of this one here can be the same as this one here, so we could see it testing down to the 372 or the 370 again as well. It will put a softer bias on the resources and the material sector, and affecting Australia, countries like Australia, South Africa, and Canada, and so forth. So Okay, so the gold market would be roughly the same as well, but it's holding up quite nicely because it's got that different sort of edge in there in terms of safe haven, so to speak. But you know, the main point here and always has been is that you know, after this strong trend up here, there's a beginning of a trend, the building section, the center of the trend when everybody's piling into it, the most volume. So the beginning, the middle, and the end of the structure up here, and we do expect it to climb higher, but it's always going to be a struggle, and it's going to be dropping and going higher, making a new high, then dropping, making a new high, and dropping. So, you know, it is going to be a bit of a slow haul to the upside there, and you know the numbers within here as well. So when we look into these numbers here, levels and so forth, we know that we're working with well, the group 2 here to start with. If we do take this up for wave 1 here, then the 61.8 retracement level back is close to the 1750 here, the midpoint. So it is possible for this market to move back to the midpoint first before it moves up any higher through here. So just need to bear that in mind through here. So in terms of managing the risk, the 1772 is really, it's just critical there. So if that becomes the resistance, then expect the 1750 to be reached. Yeah. Otherwise, if we're wrong and the 1772 holds there as support, and makes support on top of the 1780, well then you can add if it has support on the 1780, and then trade up to the 1800 and take most of the money at that point there. So look, if it certainly drops, if you're unsure of what a retest is and resistance there, then if it simply drops through the outside of the group 2 here, the 65, 1765, then you know it's weak at that point there. Right, that's it. Let's have a look at currencies. Okay, the US dollar here is continuing to creep to the upside. It is struggling at the 80 here, but it's still making headways to the upside, and it's also expanding as well. So that in itself is a strong aspect in terms that it's just the swings and the moves are actually getting larger as it's moving to the upside. So I've relabeled this structure coming down through here a little bit, and considering that this being the 1, the 2, the 3, the 4, and the 5 down here, an extension of the 5th wave here for the 3rd, and the 38.2 retracement level coming in closer to 81 here. But the main thing that we've sort of gleaned to is that the 80 here becoming the support or the resistance, and it hasn't failed here as yet, so that's a positive sign. And while that's a positive sign, obviously that's going to be placing pressure on a range of other markets out there, the indices and commodities and other currencies and so forth. So it's not failing here at this point. So it's a positive thing. We recognised that yesterday that we had this this A, this B, and this C down through to here, and it had the personality of a corrective wave in terms that normally the A wave is sharp and the C wave is a little bit more lazy, and that seems to be the case. So we're looking for upside here, and it appears that we've actually got this here as an impulse wave to here as a 1 and back for a 2 here. Sure, it can be another A and a B as well, but now that it's gleaning support on here, then it's a sign of being positive. It will have it will find resistance within subgroup 1 here as well, the 10, the 20, and the 30, and it will create another retest onto the 80 at that point there, and that will be the one that will be the most important. So, and if it doesn't retest, if it doesn't fail within here and doesn't retest it again through here, then that's okay too, to be positive. Well, it would be positive, wouldn't it, if it doesn't retest, but if it found support on top of the subgroup 1, the top of the 30 here, that will give it more strength as well. So this is going to place pressure on the indices eventually, and more directly the currencies as well. So, and looking at the Australian dollar, it would place direct pressure on that, because of if the S&P 500 fell out of bed, then it failed at 1450, well then that's really going to put some pressure on there as well. So when we're looking at the euro here, we're looking at the euro in the same wave 4 as well, but obviously in a different direction, just the opposite of that, the mirror opposite. And the wave 4s, when wave 2s are simple, then wave 4s can get quite complex. And we do believe it's a corrective structure to the downside here. So if the US dollar is going to be pushing up further, then we have to expect the euro to be pushing down, and the support level for that would be the 127.72. So that's what we'll be looking at there next. So expecting another low to come in through here before we see any upside. So just bear that in mind, and in drilling down into this a little bit closer, we had this as a wave 4 here, as a low here, but we didn't have any evidence of the correct structure to the upside. We still haven't seen that just yet. So we're expecting another move to the downside here to check in down through here before we see any upside here. So just be mindful of that. Yeah, and yes, and the Australian dollar much the same too, under a lot of pressure here. And if the S&P 500 does fail at the 1450, if that is the case, then it's going to give direct pressure to the Australian dollar here. So we've had to rework the larger wave count here, and looking at the wave 4 that we were originally looking at through here, and labeling this as a wave D here. Now that would come into effect if this B wave, lower B wave here, was taken out, and we do believe that's the case because we've got a strong impulse wave coming down through here. So I think we're on the right track. Now the distance from this low here to this high here, the 61.8 retracement level, is down very close to the $1 there. So in breaking that structure down through here, obviously there's always different ways to count the structure to the downside, but we're looking at an E wave down in 3 waves, and possibly the A wave to here, the B wave across to here with a smaller A, B, C for the A wave, the 3-wave structure down for the B wave, and this 5-wave structure here for the C wave to make B here, and then looking for 5 waves down. And we had a bit of an extension in wave 3 here yesterday, and so we should be looking for more downside as well. It's quite possible this little correction here is not completed yet, so we could see 2 things here. We could see it move down to the 101.72 for the low of the 3rd wave, then the 4th wave, and then the move down. If the 4th wave is going to start from here, then we'd be looking at the 102.30 for support there in terms of, let me just see if I can find this here. It's not quite the one I was looking for. Okay, this will do. So there's 2 things that can happen here. One is that it moves down here into this little area through here, and then has its move back up into here as such, and then moves down from that point there. So it'll be failing to get support on the. If support at any time finds support on the 102.30, then we need to look to the upside at that stage, and looking up for to the 102.72 here, and that's pretty close to the 38.2 retracement level there. So don't really have to worry about that unless the support comes onto the 102.30. But even if support is found on the 102.20 here, the pivot within group 1, well then that's a warning sign. So just be aware of that. But yeah, this is a little 4th wave structure of 1 degree here, so it's likely to come down and retest that before going down further there. Well, that's really about it. And it would have been a nice trade yesterday, but I did sort of steer people to this trade here, which was the pound here, in terms of getting a break through this trend line through here, and getting the retest. So it was quite nice really, because it came down through here and then it retested that trend line, and that's what you sort of look for. So the breakout's important, but the retest is always more important, and then you need to work out the failing of a retest. What is a retest, and you know, how do I enter in here, and that's why the price always comes in, you know, so important through here as well. You know, even the price of, you know, the 618 here, the 1618 here, I would have been looking at that retest, that price there, the Fibonacci number through here. So always be mindful of the price, because really that's what it's all about as well. And the trading levels are just one way of looking at price. Many roads to Rome, so to speak, but it just gives you some sort of matrix to give it, to break it down and give it a bit of science. But like I said, it's not the end and be end of all. So, okay, well, that's really about it. So, yeah, look, just sort of recapping a little bit, it's just really being mindful of those US markets there, because that 1450 and 144 on the S&P 500, you know, if they fail and move to the downside, then that's going to bring the commodities down. It's going to bring the currencies further down. You know, it's a really key point there that that can be used to enter short positions. So even though the Australian market is moving up, and it's got a double top at the 44.50, as Gann would say, double tops are never the end of a bull campaign. So, but at the same time, we need to be mindful that we'll get some sort of reaction there. So we will look for a couple of short trades to put out just to hedge any longs in the market there as well. The other thing to be mindful of is that is the bullish weekly cycle in Australia. So that would be Wednesday creating the midweek high, and Thursday being the bear day. So if it is a bear day today, then what we're looking for is that in the afternoon session, we'd be looking for the market to be edging down, but on lower volume, meaning that that would be a bullish sign to go in and buy, and looking to add to positions on Friday morning if it was also positive, and then also looking to add on in the afternoon session on the Friday as well, in terms of looking for Monday being a bullish day. And looking at the ADP figures that were out last night in the US, they were positive, so that could be a positive lead, not always, but in most cases it's a lead for positive non-farm payroll figures to come out. Also in the Australian market this morning, we need to be looking at the retail figures coming out at 11:30, and also the building figures coming out as well. I think the building figures will be positive and the retail sales will be negative, so a bit of a whipsaw there. So just be careful about that. So, alrighty, well, good morning and good luck.